When are client meals deductible? Do you want to jump on that
Well,
one?
they've kind of changed the rules around and kind of gone back and forth. At one point early last year, it was pretty strict on what was going to be deductible. And I think they've loosened it up somewhat since then.
Yeah, I know a few of our colleagues in the accounting profession wrote some letters to get some answers on the Tax Cuts and Jobs Act. And the IRS's position is that the removal of entertainment did not destroy the meal deduction. That was actually a concern at the beginning of last year. Hopefully you never had to hear about it. But there was people freaking out a lot because they thought, oh my God, I can't write anything off. What they did take away was our ability to write off meals for the convenience of the employee at 100%. They made it into 50%. So
Correct.
I'm just going to kind of go over. I snapshotted some of my cheat sheets, but in order for any expense to be deductible, it has to be ordinary, necessary under the Internal Revenue Code, which is 162 is the controlling provision. It just can't be lavish or extravagant, and first class is not lavish or extravagant. So they can't sit there and tell you that you can't do first class flights, you can't do first class restaurants. You have to it's basically it's circumstantial. So if it's you and one person, I suppose don't go too nutty and spend, you
Yeah.
know.
I haven't seen any guidance on this lavish or extravagant terms. I know that's what IRS is using, but uh,
The only
I
thing
think it's going to be very subjective.
the only thing I've seen is they said that first class is not lavish. When people were asking, can I go to the best restaurants for business? Can I fly first class? Can I use first class accommodations on a luxury cruise ships? Things like that for travel. And they said first class is not lavish or extravagant. Um, Third is the taxpayer or an employee of the taxpayer is present at the furnishing of the food or beverages. In other words, hey, you're really meeting with somebody with an intent to make money. This is not entertainment, so I have to make sure this is clear. You cannot deduct meals for entertainment any longer. The food and beverages are provided to a current or potential business customer, client, consultant, or similar business contact. And in the case of a food and beverage provided during or at an entertainment activity, you have to separate it out. The food and beverages are purchased separately from the entertainment, and the cost of the food and beverages stated separately from the cost of the entertainment on the bill. Uh,
And that's really important because, like, if you get a box at the Golden Knights game or
mhm.
something that's catered, they're going to give you one bill for it, and you really want them to bill it separately.
And I'm just going to give you guys I'm going to highlight something here if I can make my pen work. It says it may not be circumvented, so you can't get around it by inflating the amount of food and beverages. So you can't jack up the food and beverage rate and say, hey, the entertainment's free. I bought a $60 hot dog and got Lady Gaga for free. That doesn't work. So anyway, meals and entertainment are typically limited to 50%. There's a few exceptions. Holiday party being one, you can write off 100%.
Right.
And if you are providing it as part of a presentation to the public, so if you're doing, um, a luncheon for your prospects, and it's part of the, your prospects, you're just mailing out there to a bunch of people or putting things in the newspaper or whatever you're doing to gain it, Facebooking it, saying,
Yes.
hey,
Yeah. You have an open house
yeah,
for your business.
yep. So then you can write it up. It's for employees, it's 50%. So if it's for the public, it's 100%. Anyway, so I think we killed that one. Let me just see. I have so many questions. You guys have already been active today. Define entertainment. You kidding me? It means you're not trying to make business out of it. So entertainment is done under the Tax Cut and Jobs Act. So what I mean done as in put a fork in it, you can't write it off. So if you're going and the primary activity is something other than to discuss business. And so the easiest way to look at this is the IRS says, hey, you don't go to a golf course to talk about business, even though everybody goes to the golf course to talk about business, right? or to shank some balls. What they say is when you're on a golf course, you're there to golf. That's entertainment.
So your theater tickets are out, your concert tickets, sports outings.
All of that you can no longer deduct. So entertainment expenses were gone last year. We thought they threw out the meals along with it because they had similar provisions and they didn't differentiate the meal from the entertainment. So a bunch of accountants were going, hey, we can't take clients out and prospects out for meals anymore. And luckily, the IRS has come back and says that's not how we're going to interpret it. We think it's only the entertainment. The intent of the law was entertainment only. So you can't take a client out to entertain them. You have to be discussing business. I hope that can make sense. Somebody's writing in all caps. Sounds like business should be done over dinner only. Pretty good.